I think I did everything right. I was rushing the thumbnail, the title, the everything. Was a little bit busy. Pampu. Bitcoin pampu, guys. Bitcoin pampu. It's gonna be interesting. Oh. Is this getting ready for the crash or what? Sorry about your ears. Mladen is in the chat, because we gotta know. Where is the live? Which live? Five minutes, guys. 5 minutes. Play Dodge Daddy. Hit the like button, guys. Hit the like button. We're taking 5-minute break. Hit the like button. Guys. What you think? Mladen, Centerplan, Bridge Cable, Vishal, Casper, Rolo, Linda, Bubbly Fat, Toxic, South, Chamali, Lash, Crypto King, Easter Island, Head, Drunken, Humor is in the Nami. How you doing, man? Pump until new moon. We're gonna see that. Dodge Daddy, play Dodge Daddy. No, we're not gonna dump. We're gonna pump. Yeah, gonna dump tomorrow. It's time for a poll. We dump or pump? Yeah, time for a poll, guys. Pump or dump? Pump. Okay, let's see what people think in the chat. Ciao, Sally. Ciao, Salim. What's up, Tele? What's up, Rocket Man? Marin, Jurgen. I think it will be different. Three minutes left, guys. Does anybody have the numbers? We're gonna do this a little bit differently. We're gonna watch 1 minute shot, guys. No lines. 8 o'clock. That's over there. This is live. Can we make it smaller? Something like this. Too much. There we go. And we got a chart on the right side, left side. What you guys think, guys? Are we gonna dump? Are we gonna pump? 59% says dump. Only 41 thinks we're gonna pump. 71 priced in and therefore bullish. Well, we are dumping a little bit though. When are we getting the numbers, guys? Press conference is 2:30, so this is nothing actually in 30 more minutes, but who is always the first? Let's go to Twitter. Twitter is always first, guys. Twitter is always first. Fomc. Latest. The silence before the storm. 1 minute to Fomc. The numbers are gonna come out, guys. Somebody already knows. They already know. Is this a pump before the dump? Is this a move towards upside before we actually dump towards downside? What's gonna happen, guys? Sorry for eating, but you know, I'm hungry. Numbers will be published in 2 minutes, yeah. 15 seconds, 10 seconds left. I think there is always, you know, there we go. Oh, look at the pump. Somebody knows. Look at the pump. Look at it, guys. Look at it go. Is this the pre-pump? Look at it go. What's happening, guys? And right now down. Is this a pre-pump? Sorry for drinking, I'm thirsty. Little pump before a huge dump. Look at it move towards downside. Look. The volatility, guys. The volatility is kicking in. Somebody tell us numbers. Wow. The volatility, guys. They are wrecking everybody. What's gonna happen? How much is this move? This is, you know, 2% move, and then right down, you know, 5% move. S&P 500 is not actually, S&P 500 is actually closed. Actually, you know, not moving that much. Bitcoin down. Right now, back up again. Look at the wick on the upside, guys. Look at the wick on the upside. What's happening? 75. 75, guys. 75. Everybody's getting wrecked, guys. Everybody's getting wrecked. 75. 2% in milliseconds. You can't trade this, guys. You can't trade this. But Bitcoin, then convert to coin of choice. Buy a little cheap coins. The volatility, guys. The volatility is kicking in. Can we look at it 5-second chart? Can we look at its 1-second chart? Look at the curve up here. Look up, down. Look here. We're getting the cup and handle on 1-second chart, guys. 1-second chart. I thought we could watch this on 1-minute chart. You cannot watch this on 1-minute chart. Poll is done. 53% is gonna be dump. So we're gonna see that, you know, some kind of line here. It's climbing up here. This actually looks bearish. This is actually, you know, how it actually played yesterday. So we're gonna see that. Oh, it's coming back up again. Doesn't want to dump. Doesn't want to dump. The moves, guys. The moves. Up 2%, down 3%. 4.6 is expected target for 2023. Told you I can move the market by a lot. Yeah, it has nothing to do with, you know, a whole world watching the same numbers. Look here, there was a lot of volume up here. The volume kicked in, like volume right now, you know, it's consolidating. I think people are a little bit unsure what to do. This is cool, even if my money depends on it. This is cool, yeah. Maybe some kind of falling wedge up here. Oh, we're gonna break this falling wedge towards upside. Look how we're nicely holding this 1 second 200 moving average, like it matters. DXY going up. Yeah, DXY is 11.5. Let's see this on a 1-minute chart up here. Yeah, it exploded towards the upside. Broke actually towards the upside. Right now, moving back a little bit up here. Bitcoin, let's go to 5-second charts up here. Actually breaking back on the downside. Big volatility kicking in. Yeah, but we don't actually know what's gonna happen until you know, the press conference. The press conference is the most important one. You know, this was already kind of pressed in. Oftentimes, you know, we get these, you know, zigzag move before something happens up here or something happens up there, down there, up there. Pump defo. So we should see a huge pump. Yeah, everybody's thinking that. I'm not quite so sure about that. There is definitely movement going on, though. There is definitely movement going on. This is 5-minute chart up here. Any kind of chart. Let's see, 5-minute chart up here is gonna close below all of the moving averages down here. 1-minute chart, yeah, we went up there, got rejected by that. Bulls are not that strong though. Bulls are not that strong, so you know, a little bit unsure. Maybe they're gonna come back. Maybe they're gonna come back. Rise by 75. Yeah, 75 is expected, but you know, we are definitely not pumping. That, I can tell you that for sure. The Federal Reserve made history on Wednesday, approving a third consecutive 75 hike in aggressive move to tackle the white shot. 30 minutes, we're getting the real move. Yeah, I think that in 30 minutes is going to be a real move. OP is suddenly going down. Don't lose your sense of humor. So there is that. You know, maybe there is, you know, some kind of bigger move up here happening, you know, but this is manipulation from the start to the finish. Like this over here, like definitely manipulation going on. So, you know, they know that everybody was expecting this on the dollar, like on the dollar. Look here, let's go to 1-second chart. When was it? 8, 3, 2, 1, right up here. That's the you know, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Exactly 10 seconds before 8 o'clock. Exactly 10 seconds before 8 o'clock, they start moving towards the upside. Right back down again. It's, you know, it's getting everybody wrecked right now. It's getting everybody wrecked because, you know, too much leverage positions. You know, people are hoping for this, for that. You know, up, big move down right now, and you know, the question is what's gonna happen next over here. Maybe there is some kind of hope. Maybe this 1 second chart over here is breaking a little bit towards upside up here. Maybe, just maybe. My long is going crazy, lol. When did you enter the long, man? When did you enter long? Let's give it a little bit of hopium time up here. You know, draw nice lines up here. Maybe some Clarice, give or take. It's going a little bit and then dump like a mofo. I mean, it already went a little bit up. It, you know, it dumped down like a mofo already. We are already down from the top to the bottom. You know, this was a 6.42% move in matter of seconds, literally seconds. Like if you go to the, you know, second chart up here, this happened in less than you know, up here to the bottom. Let's say the bottom is down here, like yeah, 43 seconds. I lost around $1,000 in 2 cents, but back up 415 7 seconds later. Yeah, it's the second chart trading up here. Let's look at how this looks on the daily time frame up here. Daily 5 hours until close. Let's see 4 hourly. 4 hourly still got 2 hours to close, which it does not actually look good. You know, if you start closing below the, you know, 18.3 or something like that, 18.8, what's that? 18.8, 18.8. That's gonna be actually bad. And that is, you know, it just has to drop a little bit more to avoid divergence. But you know, it's hard to say what's gonna happen next. It's hard to say what's gonna happen next. This is initial move, because of the, you know, Fed you know, announcement of the interest rate. And I think we need to wait a little bit. We need to wait a little bit, like not a little bit, we actually need to wait 23 more minutes. Right now, this, guys, I don't know if you actually noticed, but this actually lasted already 7 minutes. This move is already 7 minutes old, and you know, I still feel like we are in the very first stages of the move, like first 20 seconds. Basically died and some came back to life. What's the after like? I don't know. So, but you know, it start pumping. You know, it get this, you know, big move down here right now. It looks to me like a shoe pattern, guys. Doesn't look like a shoe pattern to you guys? You know, down, up, and then you know, you got this curvature over here. Down, you know, down, up, and then you got this curvature up here. So as soon as start breaking this towards upside down, back up again, right? Winning. And then of course in 22 more minutes, then we dump down again. It's up, it's down, it's up, it's down. I think there is a lot of bots right now trading this line. Look at the volume up here. Look at the volume. The volume is insane, bro. Look at the volume. This 2-minute chart up here. Let's see 5-minute chart up here. Look at the volume. The volume is insane. I don't know, like this dump over here did not generate this much volume. Let's go to 1 hourly. Yeah, there was actually over here on this big dump over here, there was actually a lot of volume coming in. But this is a big volume. This is a big volume, and that is, you know, and this is just the start, because it's only this volume candle up here. This is a 1 hourly candle. This volume candle is only 8 minutes old, so it still got like 52 minutes to fill up the volume. It still got like 52 minutes to fill up the volume, right? There we go. That's the, you know, that's the, you know, a shoe pattern up here, breaking towards upside up here. Hopefully towards upside. Hopefully towards upside. You know, the good thing is this isn't just, you know, dropping straight down. It went up then down. You can see there was a lot of positions being made. Look here, guys. Look at the volatility, guys. This is one. I don't think you guys understand. This is the 1 second chart. This is the 1 second chart, and volatility every single second is 1.28%. 1.28% every single second. There is a 1.28% move every second. 1 second, like up down, up down. This means only one thing. This means only one thing. Bots, traders, definitely bots. I think that this is definitely bots working overtime over here, trying to hold the bottom over here. And you can see here the same bottom is holding down here. Managed to hold it, holding the same level up here again. Right now breaking the resistance up here, consolidating up here. I think this might actually go towards upside up here. Hopefully this goes towards upside, because if it doesn't, then, you know, game over. There we go. Maybe, just maybe it's gonna go up. Come on. Maybe. Nah, it's there we go. Come on. I think it wants to go up. I'm a little bit unsure, but I think it wants to go up over here. There we go. Oh, it got rejected. Oh, it got rejected again. Can you see that? Can you see it's getting rejected a little bit? It wants to go up, but, you know, it's kind of getting rejected up here a little bit. There, yeah, it wants to fall down. We got a double bottom down here. Double bottom right now is going to try to break this towards upside over here. You can see it fell out but failed. then it got up, then failed, and right now got rejected by that move again on the downside. 1 2 3 or 1 2 broke the resistance, support, and right now going down again. So we broke this triangle back towards downside, so we're gonna retest this level down here at 18.8 or something like that. Definitely a lot of movements going on right now. This 5-second chart up here maybe a little bit easier to see or hear what's happening, but still 19 minutes left. TIA does not count now. If Paulo farts the wrong way, it can totally shift. Yeah, TIA doesn't count now, guys. TIA is out of the window. How much will the numbers be? What kind of numbers are we expecting? I'm a little bit unsure what we are expecting when it comes to numbers. What we can let's see what Twitter is writing over here, whether they're bullish or bearish. Finance and financial trade during the Fomc meeting in the live market, latest insights. Good question. Is the right big picture goal to flatten my portfolio delta, blah blah blah. Fed hikes rates, interest by 75%. What is this? Federal press release. Okay, we are not interested in reading entire press release. Manipulation at 75%. Email. Imagine it was yeah, imagine it, if it was 1%, we would just drop down. Yeah, it's 6.46% towards us. So definitely big moves. So they are abusing this as much as they can, this volatility and this market right now, as much as they can. Big volume as well. Of course, there are definitely people, getting profits on these moves. I mean, 6% move in seconds, like that's insane. Futures after Fomc 89% share Fed rising, another 75 in November meeting. Futures after Fomc decision imply. So stocks are also right now dumping on downside. They actually started dumping exactly on the dollar up here as well towards downside. Big move down. This is Dow Jones. This is S&P 500. S&P 500 goes back to this this bottom down here. This to me looks like a head and shoulders pattern up here. Head and shoulders pattern. This was actually a head and shoulders pattern and got rejected, but you can technically say this is still a head and shoulders pattern. It's right now sitting on the support. Are we gonna sit on the support down here on S&P 500 for the next 17 minutes until something happens and then blow through the upside? A little bit unsure about that, but the moves are literally insane. Let's go back here to 1 second chart, because reasons. Everything is more fun on 1 second, guys. I don't think you understand that, but everything is more fun on 1 second charts. Let's go to 5 second chart, because right now the initial movements are crazy, and these 5 seconds move are 2.73%. Wow. Increased by 75. Dude, you this good. Why you not retry for trading it? Sasha is the man. I called exit liquidity. Exit liquidity. I don't know, man. Down here, I mean, there has been a lot of buying. The price went down, and there has been a lot of buying. I don't know if this has been selling or buying. But if price goes down, there is a lot of bulls coming in, holding the level and pushing it. But you can see down here they're still trying to push the price below the support up here. See up here, went up here right now. They're still trying to so I'm guessing these are major levels down here. I think 18.6, 18.8, give or take. Down here these are major levels, so I think bulls are going to try to hold these levels until the press conference. I think bulls are going to try to hold these levels until the press conference, unless this just suddenly drops for whatever reason down on the downside. But it's important level of support right now when we crash towards downside up here. It looks like this is just there is a lot of selling going on. There is a lot. You can see this kind of structure where the price just slowly climbs towards downside. This kind of continuous selling into a downtrend, right? Continuous selling into a downtrend. Still holding 70k. Why not retire from trading yet? Because I'm bad at trading. I don't know how to trade. Michael Saylor said he bought more Bitcoin. Do you consider it's bullish or bearish? Do you know how much Michael Saylor bought? Michael Saylor bought 7 million. That's how much. That's at least from what I'm hearing. He bought 7 million of Bitcoin. Do you know how stupid that is, considering how large position they have? They have 2.3 billion Bitcoin, you know, worth of Bitcoin, 130,000. You know, so 7 million is nothing. It's like peanuts. It's like, oh look, we are still buying. They're not actually buying. You know, buying is, you know, buying, you know, a 10% or something like that. Do you know how much 7% is of 3? Let's see, 7 million. 7 million, 2 zeros divided by 2.3 billion, 2.3 billion. This is 130 million, 2.3 billion, 2.3 billion equals 0.3%. They increased their portfolio by 0.3%. That's how much Michael Saylor bought, you know. Saylor always buy the top. It's only a matter of time until we break the red box, in my opinion. I don't know if it's a matter of time or not. So I think this is just consolidating right now, and it's kind of waiting because, you know, the big news happened. What was expected, you know, started, you know, towards towards the upside, and on the downside, there was definitely huge buying. Anything up here, entire up here, there was huge buying by bots and selling by bots. There was huge activity, and you can see right now that the volatility is actually going down. So the volatility is dying out. You can see down on the this from Coinbase, the volatility is dying out. Of course, this cannot go to zero, but you know, volatility can definitely stop. We can maybe even use Bollinger Bands up here just to, you know, see the volatility up here. You know, look at the volatility on 1 second chart, and right now it's slowly kind of going down. It's not, you know, down at the bottom. It's not like it's inactive, but it is very low. It is very low. Like right here before the meeting, it was kind of low. This was, you know, that activity over here. So, you know, the activity is going down definitely towards downside over here. You can see here, you know, from we started the move up here, you know, volatility came up, and right now volatility is slowly going towards downside. So the market is slowly, you know, slowly adjusting to what's just happened, and they need time to figure out whether this is actually bullish or bearish. Even though it is priced in, even though everybody, you know, the greatest mind in the world have actually been thinking about whether this is bullish or bearish, most likely it's 75%. If it's 75%, what are most people thinking? Most people are thinking bullish, so you know, 75 bullish. That's why we're gonna dump the market. So there might be some kind of inverse, you know, inverse psychology up here happening. Am I seeing a shoe pattern? Yeah, I mean, it could be shoe pattern on some kind of time frame. I thought this over here was shoe pattern. Maybe the shoe pattern actually played out, but kind of failed. Maybe it's still going in the shoe pattern up here. Maybe the shoe pattern is still valid. You know, there might definitely be, because this you know, pivot point up here. This pivot point broke towards upside, which is quite nice. And right now we are creating the secondary pivot point up here somewhere. Maybe something like this up here. Maybe we are breaking this towards upside, which is actually quite good. Maybe this is the shoe pattern still in play up here. You know, I thought, you know, because I had this stretched out like this, so you know, maybe it should be something like this up here. So maybe we have you know, more room to go. But yeah, there we go. Bulls are you know, catching up again. Bulls are catching up again, trying to push the price up. We're gonna see how much you know, firepower they actually have. Still no volume coming in up here, so you know, haven't broken it yet. I see Putin pattern. Same time just announced. Yeah, you're kind of late. It was like 20 minutes ago. BTC liquidation watch. Oh man, we missed BTC liquidation watch. Let's go to YouTube. I think there is always some YouTuber has you know, this. But where is the chart for the BTC liquidation? Live. What's this? Millisecond, 1 second. The volume is low right now. This is not live. Sorry. This is live. Yeah, that's more like it. There you go. XRP Pampu. XRP. Oh my god, what's happening with XRP? What's happening with XRP? Who let the dogs out of the room? Look at the XRP go, guys. Look at the XRP go. It broke this towards the upside right now, right back up there. Now this, you know, is Bitcoin gonna pump? Bitcoin is recovering, if you can call this recovery. I don't know what this is. Is this recovery, guys? Is this recovery over here? I don't know. The S&P all down. Yeah, everything is down. S&P 500, Dow Jones, everything is down. Can we go back in time? Can we go back in time like 20 minutes to see how this actually played out? Okay, here it is. Right. There we go. This is how the liquidations went when we started. Look at this, guys. Look at this. Do you like the sound? Now look at the move down. I mean, it's lagging because there is so much liquidations going on. Las Vegas, yeah. This is the sound of like Las Vegas. Look at this, man. Look at exploding. I don't know even how much, you know, how many liquidations, you know, got liquidated. Look at the moves. Look at the sound. There's bearish engulfing 50 minutes AVAX. The drop is due to GTB expectation lower than futures rate at 4%, which has missed the bond market and wasn't expected. There we go, there we go. You just saw what happened. And right now, let's see up here what's happening right now live. Yeah, like it's two different things, two different things. Let me see up here, just let me zoom in up here. 70 minutes ago, 2.33 thousand liquidations. I don't know if that's a lot or not. The S&P is still, you know, pushing a little bit towards downside over here. Let's see here 1 hour chart. It's still broke on this on the downside. So, you know, it is, it might actually be the very, very bad news. But, you know, here on the 1 minute chart, we are climbing, guys. We're climbing. 1 minute chart, XRP pumping. Why is XRP pumping? Did XRP news come out or something like that? How much is this move? This on a 1 minute chart. It's up 6%, man. XRP and Bitcoin are you know, inversely correlated. I don't know, a lot of altcoins are not doing actually that much. I mean, there is definitely, you know, volatility, but they're not doing that much. They're not doing that much. Let's just watch this on 1 minute chart. Let's go up here and see a little bit up here, extend up there and go back to here. Let's see more on Twitter what people are writing. We're still buying, or it's too early for the Fomc to draw conclusions, blah blah blah. I don't understand this language. Congratulations for those who trade the volatility and hold with no new positions of Fomc madness. You are the winner. Fomc, everything down. I don't know what this is, but you know, this S&P 500, this is CFDs. Everything is down on the Fomc, except volatility. Volatility is up. Volatility is up, but S&P down. CFDs down. I don't know what this is, but it's down 30,000. Probably Dow Jones. 11,000. This is Nasdaq, I think, and 2.5. I don't know what this is. SOX. I don't know. SOX is actually up, is plus 11, but you know, it dumped down on the start. Well, I sold the top on Ethereum. Thanks, Fomc and Jeremy Poe. Nice. He did well, man. He did well. He sold the top. Nice. Very, very nice. The main influence of interest rate on the US dollar due to the strong correlation between cryptocurrency and stock markets. The indicator directly affects the volatility of cryptocurrency. The indicator directly affects, yeah, that's definitely due to strong correlation between crypto and stock markets. Yeah, so Bitcoin is, you know, kind of messed up every time this happens. But nobody's telling me, as predicted, the fact that blah blah blah. I'm minded on few. It's Fomc. It's 75. Federal Reserve rising the market often dips like this immediately after announcement. It also often recovers shortly afterwards. Yeah, maybe we're gonna see that. I'm a little bit unsure whether this is good or bad, because you know, it was kind of expected, but you know, too many people are bullish, so you know, might actually go in another direction. For hourly, the bulls are going to want to win this Fomc meeting. Yeah, it's too late. Columnist, I wish I could do the same as Fomc and keep writing the same column but just change around the 3 words. Fomc X rate, yeah, Fomc. What's this over here? GDP USDT. Yeah, dollar goes dollar down against GDP. Am I reading this correctly? GBP USD. This is also on 1 minute chart. It went down, right now recovering towards the upside. Am I reading this correctly? Let me just check, double check up here. Currencies, USD. Yeah, so USD GBP. So this is strength of the dollar. So strength of the dollar is actually going up, and right now, you know, going down again versus the pound, versus the pound. Let's go back to the chart. Are we getting the moves again? We're getting the moves again. We're getting the moves. You see down here the box, the red box. The red box was holding, guys. The red box holding. Went up here above it. Looks good, guys. Looks good. So far, so good. I gotta pay it in GBP. Better go stronger. Can we listen to Powell? Yeah, we can listen, but it's still 4 minutes left, guys. It's still 4 minutes left on the Powell. Let's go to, this is 5-second charts. The Powell. Where is the Powell? Where is the Powell? Where is the Powell? Did I miss the Powell? I think I missed the Powell. Fed. Let's just go to Fed live up here. Fed for the reserves live. That's continue. I don't know. Leaving. I don't want to leave anything, man. How do I make this bigger? Fed live. There we go. Two more minutes, so we're gonna do a quick 5-minute break, guys.
Good afternoon. My colleagues and I are strongly committed to bringing inflation back down to our 2% goal. We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised its policy interest rate by 0.75 of a percentage point, and we anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we are continuing the process of significantly reducing the size of our balance sheet. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed from the historically high growth rates of 2021, which reflected the reopening of the economy following the pandemic recession. Recent indicators point to modest growth of spending and production. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, in large part reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment, while weaker economic growth abroad is restraining exports. As shown in our summary of economic projections, since June, FOMC participants have marked down their projections for economic activity, with the median projection for real GDP growth standing at just 0.2% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. Despite the slowdown in growth, the labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies near historical highs, and wage growth elevated. Job gains have been robust, with employment rising by an average of 378,000 jobs per month over the last 3 months. The labor market continues to be out of balance, with demand for workers substantially exceeding the supply of available workers. The labor force participation rate showed a welcome uptick in August, but has little changed since the beginning of the year. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing the upward pressure on wages and prices. The median projection in the SEP for the unemployment rate rises to 4.4% at the end of next year, a half percentage point higher than in the June projections. Over the next 3 years, the median unemployment rate runs above the median estimate of its longer-run normal level. Inflation remains well above our 2% longer-run goal. Over the 12 months ending in July, total PCE prices rose 6.3%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. In August, the 12-month change in the consumer price index was 8.3%, and the change in the core CPI was 6.3%. Price pressures remain evident across a broad range of goods and services. Although gasoline prices have turned down in recent months, they remain well above year-earlier levels, in part reflecting Russia's war against Ukraine, which has boosted prices for energy and food and has created additional upward pressure on inflation. The median projection in the SEP for total PCE inflation is 5.4% this year and falls to 2.8% next year, 2.3% in 2024,
Look at the price.
and 2% in 2025.
People are trading based on every slide he posts.
Risks to inflation as weighted to the upside. Despite elevated inflation, longer-term deflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people.
19.3.
My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 of a percentage point, bringing the target range to 3 to 3.25%. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy.
So selling.
Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate. The pace of those increases will continue to depend on the incoming data and the evolving outlook for the economy. With today's action, we have raised interest rates by 3 percentage points this year. At some point, as the stance of monetary policy tightens further, it will become appropriate to slow the pace of increases while we assess how our cumulative policy adjustments
Oh, this is
are
actually
affecting
very
the
good.
economy and inflation.
He says he's going to slow the pace.
We will continue to make our decisions meeting by meeting.
So we are at the top,
and
guys. We are at the
communicate our
top.
thinking as clearly as possible. Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 4.4% at the end of this year, 1 percentage point higher than projected in June. The median projection rises to 4.6% at the end
Gold
of next year
exploded.
and declines
Silver
to 2.9%
exploded.
by the end of 2025, still above the median estimate of its longer run value. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools
Yeah,
to bring
DXY dropped
inflation
down.
back
That's
down
good.
to our 2% goal and to
Look at
keep
DXY.
longer-term inflation expectations well anchored.
Failed to get it back above the resistance.
Reducing
Nice.
inflation is likely to require a sustained period of below-trend growth, and there will very likely be some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. We will keep at it until we're confident the job is done.
Do we pump? I think we pump.
To conclude,
guys.
we understand that
I'm
our
not quite
actions
sure, but
affect
you know,
communities,
ideas and
families, and
and
businesses
bad.
across the country. Everything we do is in service to our public mission. We at the
He
Fed
said
will do
they're
everything
gonna
we
slow
can
down the,
to
you know,
achieve our
the,
maximum
increases
employment and
in,
price stability goals. Thank you, and I look forward to your questions.
He said he's gonna slow down the increases in interest rates hikes, which cannot be anything else
Hi,
but
Chair
good.
Powell. Thank you for taking our questions. Gina Smilik from the New York Times. I wonder if you could give us a little detail around how you'll
Look at
know
Kendall.
when to slow down these rate increases and how you'll eventually know when to stop.
So I will answer your question directly, but I want to start here today by saying that my main message has not changed at all since Jackson Hole. The FOMC is strongly
Pump it up,
resolved
that's what
to
he
bring
said.
inflation down to 2%, and we will keep at it until the job is done. So
Keep it at it, job is
the
done.
way we're thinking about this is the overarching focus of the committee is getting inflation back down to 2%. To accomplish that, we think we'll need to do two things in particular. To achieve a period of growth below trend and also some softening in labor market conditions to foster a better balance between demand and supply in the labor market. So on the first, committee's forecasts and those of most outside forecasters do show growth running below its longer run potential this year and next year. On the second, though, so far there's only modest evidence that the labor market is cooling off. Job openings are down
We
a
are
bit.
up from where we started,
As
at least, you know. So we
quits
started
are
at
off their
19.2,
all-time
right now at
highs. There's
19.3.
some signs that some wage measures may be flattening out, but not moving up. Payroll gains have moderated, but not much. And in light of the high inflation we're seeing, we think we'll need to, and in light of what I just said, we think that we'll need to bring our funds rate to a restrictive level and to keep it there for some time. So what will we be looking at, I guess, is your question. So We'll be looking at a few things. First, we'll want to see growth continuing to run below trend. We'll want to see movements in the labor market showing a return to a better balance between supply and demand. And ultimately, we'll want to see clear evidence that inflation is moving back down to 2%. So that's what we'll be looking for. In terms of
This is actually quite bullish move.
reducing rates, I think we'd want to be very confident that inflation is moving back down
It's actually very nice.
to 2%
Yeah, technically speaking.
before we would consider that.
Steve.
Thank you, Mr. Chairman. Steve Leisman, CNBC. Can you talk about how you factor in the variable lags on inflation and the extent to which the outlook for rates should be seen as linear in the sense that you keep raising rates, or can you envision a time when there's a pause to kind of look at what has been wrought in the economy from the rate increases? Thank you.
Sure. So, of course, monetary policy does famously work with long and variable lags. The way I think of it is our policy decisions affect financial conditions immediately. In fact, financial conditions have usually been affected well before we actually announce our decisions.
Exactly.
Then changes in financial conditions begin to affect
I'm shorting
economic activity fairly quickly, within a few months. But it's likely to take some time to see the full effects of changing financial conditions on inflation. So we are very much mindful for that. And that's why I noted in my opening remarks that at some point, as the stance of policy tightens further, it will become appropriate to slow the pace of rate hikes while we assess how our cumulative policy adjustments are affecting the economy and inflation. So that's how we think about that. Your second question, sorry, was?
Is there a point in time that you can see pausing? Is it linear that you keep raising rates, or is there? Oh, I'm sorry. I should know better than to not talk with my microphone.
I should know better than to answer your second question.
Oh, there you go. Is it linear? Do you keep raising rates, or is there a pause that you could envision where you kind of figure out what has happened to the economy and give time to catch up in the real economy, the rate increase time to catch up in the real economy? Thank you.
So I think it's very hard to say with precise certainty the way this is going to unfold. As I mentioned, what we think we need to do and should do is to move our policy rate to a restrictive level that's restrictive enough to bring inflation down to 2%, where we have confidence of that. And what you see in the SEP numbers is people's views as of today, as of this meeting, as to the kind of levels that will be appropriate. Now, those will evolve over time, and I think we'll just have to see how that goes. There is a possibility certainly that we would go to a certain level that we're confident in and stay there for a time. But we're not at that level. Clearly today, we've just moved, I think, probably into the very lowest level of what might be restrictive, and certainly in my view and in the view of the committee, there's a ways to go.
Rachel.
Yeah, Fomc is good in researching, but he's 1% growing
Hi,
from
Chair
reason
Powell,
rate
Rachel
limiting.
Siegel from The Washington Post. Thank you
Interesting.
for taking our questions. The projections show
that's
the
still
unemployment
great,
rate rising
just
to
like
4.4% next year. And historically, that kind of rise in the unemployment rate would typically bring a recession with it. Should we interpret that to mean no soft landing? And is that kind of rise necessary to get inflation down?
Right. So you're right. In the SEP, there's what I would characterize as a relatively modest increase in the unemployment rate from a historical perspective, given the expected decline in inflation. Now, why is that? So really, that is what we generally expect, because we see the current situation as outside of historical experience in a number of ways, and I'll mention a couple of those.
Yeah,
First, and you know these, but first, job
reacting very
openings
well.
are incredibly high relative to the number of people looking for work. It's plausible, I'll say, that job openings could come down significantly, and they need to, without as much of an increase in unemployment as has happened in earlier historical episodes. So that's one thing. In addition, in this cycle, longer run inflation expectations have generally been fairly well anchored. And as I've said, there's no basis for complacency there. But to the extent that continues to be the case, that should make it easier to restore price stability.
How do you
And I
like
guess
them
the third thing I would
candles?
point to that's different this time is that Part of this inflation is caused by this series of supply shocks that we've had, beginning with the pandemic and really with the reopening of the economy, and more recently amplified and added to by Russia's invasion of Ukraine, have all contributed to the sharp increase in inflation. So these are the kinds of events that are not really seen in prior business cycles. And in principle, if those things start to get better, and we do see some evidence of the beginnings of that. It's not much more than that, but it's good to see that. For example, commodity prices look like they may have peaked for now. Supply chain disruptions are beginning to resolve. Those developments, if sustained, could help ease the pressures on inflation. So let me just say, how much these factors will turn out to really matter in this sequence of events, it remains to be seen. We have always understood that restoring price stability while achieving a relatively modest decline, or rather increase in unemployment and a soft landing would be very challenging. And we don't know. No one knows whether this process will lead to a recession, or if so, how significant that recession would be. That's going to depend on how quickly wage and price inflation pressures come down, whether expectations remain anchored, and whether, also, do we get more labor supply, which would help as well. In addition, the chances of a soft landing are likely to diminish to the extent that policy needs to be more restrictive or restrictive for longer. Nonetheless, we're committed to getting inflation back down to 2% because we think that a failure to restore price stability would mean far greater pain later on.
Just to follow up on one small thing, are vacancies
so far so
still at the
good?
top
So
of your
far so
list
good.
in terms of understanding the labor market and how much room there is there?
Yes, vacancies are still almost 2-to-1 ratio to unemployed people. That and quits are really very good ways to look at how tight the labor market is and how different it is from other cycles, where generally the unemployment rate itself is the single best indicator.
I think it's good. I haven't heard anything bad, but I do not understand all the implications of everything he's saying. But still, from what I can get, it sounds okay. The best thing is that he said eventually they will lower the hikes, which is actually quite bullish.
The policy destination, there's still a way to go. But I imagine you have to have some idea about how you're thinking about your destination, whether it's a stopping point or a pausing point. And so I was wondering if you could discuss how you are thinking about, as the data come in, where that destination is, how it's moving up if inflation doesn't perform as you expect. Do you want to have a policy rate that's above the underlying inflation rate, for example? And do you have an estimate for where you think the underlying inflation rate might be in the economy right now?
So very challenging.
Again,
that might be a little bit bearish.
We believe that we need to raise our policy stance overall to a level that is restrictive. And by that I mean is meaningfully putting meaningful downward pressure on inflation. That's what we need to see in the stance of policy. We also know that there are long and variable lags, particularly as they relate to inflation. So it's a challenging assessment. So what do you look at? You look at broader financial conditions, as you know. You look at where rates are, real and nominal in some cases. You look at credit spreads. You look at financial conditions indexes. We also, I would think, and you see this this is something we talked about today in the meeting and talk about in all of our meetings, and you see this, I think, in the committee forecast. You want to be at a place where real rates are positive across the entire yield curve. And I think that would be the case if you look at the numbers that we're writing down and think about you measure those against some sort of forward-looking assessment of inflation expectations. I think you would see at that time, you'd see positive real rates across the yield curve, and that is also an important consideration.
Howard.
Hi, Howard Schneider with Reuters. Thanks for the opportunity. I just want to be clear on the steps. You say it's meeting by meeting, but it sure looks like we're going 75, 50, 25. Is 75 next month the baseline?
So we make one decision per meeting, and the meeting decision we made today was to raise the federal funds rate by 75. You're right that the median for
Best
the
case scenario, it just
year-end
goes right
suggests
up.
another 125 basis points in rate increases. But there's another fairly large group that saw 100 basis points addition to where we are today. So that would be 25 basis points less. So, we're going to make that decision at the meeting. We didn't make that decision today. We didn't vote on that. I would say that, we're committed to getting to a restrictive level of,
Well, it's a good thing that Fomc meeting is, over
pretty
and
quickly.
that we have gotten,
And,
the price
that's what we're
increase
thinking about.
out of the.
Just as a follow-up
of
to
the
that, I'm wondering
room.
about the sort of risk management considerations here, given there's some discussion now of overdoing it. What's the incentive to continue front-loading right now? Is it lack of progress on inflation seen in the CPI reports, or is it a motivation to get as much done while the job market is still as strong as it is?
So what we've seen is inflation our expectation has been that we would begin to see inflation come down, largely because of supply side healing. By now, we would have thought that we would have seen some of that. We haven't. We have seen some supply side healing, but inflation has not really come down. If you look at core PCE inflation, which is a good measure of where inflation is running now, if you look at it on a 3, 6, and 12-month trailing annualized basis, you'll see that inflation is at 4.8%, 4.5%, and 4.8%. So that's a pretty good summary of where we are with inflation, and that's not where we expected or wanted to be. So what that tells us is that we need to continue, and we can keep doing these, and we did today do another large increase as we approach the level that we think we need to get to. And we're still discovering what that level is, but people are writing that down.
I don't think it's more of
in
the
their
same,
SEP,
but,
where they think policy needs to be. So that's how we're thinking about it.
Let's go to Colby. Thank you. Colby Smith with the Financial Times. Chair Powell, how should we interpret the fact that core inflation is still not forecast in the SEP to be back to target in 2025, and yet the dot plot projects cuts as early as 2024? And does that mean there's a level of inflation above the 2% target that the Fed is willing to tolerate?
So I guess core is at 2.1 in 2025, and in the median, and headline is at 2.0. So that's pretty close. I mean, we write down our forecasts and we figure out what the median is and we publish it. So it's not. I would say that if the economy followed this path, this would be a pretty good outcome. But you're right, it is a tenth higher than 2%.
Okay, just as a quick follow-up, if the concern is that underlying inflation is becoming more entrenched perhaps each month, then why forego the more aggressive 100 basis point increase today? And does that risk having to do more later on?
Yeah, so we, as we said, at the last press conference and in between that one and this one, we said that we would make our decision based on the overall data coming in. So if you remember, we got a surprisingly low reading in July, and then a surprisingly high reading for August. So I think you have to, you never want to overreact too much to any one data point. So if you look at them together, and as I just mentioned, if you really look at this year's inflation, 3, 6, and 12-month trailing, you see inflation is running too high. It's running 4.5% or above. You don't need to know much more than that. If that's the one thing you know that this committee is committed to getting to a meaningfully restrictive stance of policy and staying there until we feel confident that inflation is coming down. That's how we think about it.
The only page is there are not enough likes, guys. Hit the like button, guys. Not enough likes. We need more likes.
Hi, Victoria Guido with Politico. I wanted to ask about the balance sheet. You all have left open the possibility that you might sell mortgage-backed securities, but we've seen significant slowing in the housing market. Mortgage rates have gone up significantly, and I'm just wondering whether conditions there
You cannot talk about housing market
might
without it
affect
being
your plans
bad.
for how quickly you have the runoff on the MBS side.
So what we said, as you know, was that we would consider that once balance sheet runoff is well underway. I would say it's not something we're considering right now, and not something I expect to be considering in the near term. It's just it's something I think we will turn to, but the time for turning to it has not come and is not close.
Well, and will conditions in the housing market affect that decision?
I think a number of things might affect that decision. But the main thing is we're not considering that decision, and I don't expect that we will anytime soon.
Bullish October. Yeah.
Thanks. Neil Irwin with Axios. A number of commentators have come to the view, and including over at the World Bank, that simultaneous global tightening around the world creates a risk of a global recession that's worse than is necessary to bring inflation down. How do you see that risk? How do you think of coordination with your fellow central bankers? And is there much risk of overdoing it on a global level?
So we actually, my colleagues and I, a number of my FOMC colleagues and I just got back from one of our frequent trips to Basel, Switzerland, to meet with other senior central bank officials from around the world. We are in pretty regular contact, and we exchange. Of course, we all serve a domestic mandate, domestic objectives, in our case, the dual mandate, maximum employment price stability. But we regularly discuss what we're seeing in terms of our own economy and international spillovers. And it's a very ongoing, constant kind of a process. So we are very aware of what's going on in other economies around the world and what that means for us and vice versa. The forecast that we put together, that our staff puts together and that we put together on our own, always take all of that, try to take all of that into account. I mean, I can't say that we do it perfectly, but it's not as if we don't think about, the policy decisions, monetary policy and otherwise, the economic developments that are taking place in major economies that can have an effect on the U.S. economy. That is very much baked into our own forecast and our own understanding of the U.S. economy as best we can. It won't be perfect. So, I don't see it's hard to talk about collaboration in a world where people have very different levels of interest rates. If you remember, there were coordinated cuts and raises and things like that at various times, but really we're in very different situations. But I will tell you that our contact is more or less ongoing, and it's not coordination, but there's a lot of information sharing, and we all, I think, are informed by what other important economies.
Yeah, tons of, that's what I'm actually afraid of.
Doing.
I'm afraid of too many people FOMOing in, so the reversal can actually be quite bad for everybody.
Craig Torres from Bloomberg.
So stop FOMOing in, guys.
You talked about
Just
some
hodl.
ways the
Stop FOMOing
higher
in.
interest rates are affecting the economy, but we've also seen a resilient labor market with durable consumption, strong corporate profits. And I'm wondering what your story is on the resilience of the economy. After all, you and your colleagues said, well, we started tightening in March when we were talking about interest rates in the future. And indeed, Treasury rates moved up. So we should have had a lot of tightening taking effect. Why is the economy, in your view, so resilient? And does it mean that we might need a possibly higher terminal rate?
You're right, of course. The labor market in particular has been very strong. But there are the sectors of the economy that are most interest rate sensitive are certainly showing the effects of our tightening. And of course, the obvious example is housing, where you see declining activity and of all different kinds, and housing price increases moving down. So we're having an effect on interest sensitive spending. I think through exchange rates, we're having an effect on exports and imports. I think so. All of that's happening, but you're right. And we've said this. This is a strong, robust economy.
What?
People have savings on their balance sheet from the period when they couldn't spend and where they were getting government transfers. There's still very significant savings out there, although not as much at the lower end of the income spectrum.
Did he say
but
this?
Still some savings out there to support
Between 100 and 110 for the rest of the year.
The states are very flush with cash. So there's a good reason to think that this will
What does
continue
this
to be
mean, guys? What does
a
this mean, guys?
reasonably strong
Guys.
economy. Now the data sort of are showing that growth is going to be below trend
Did you
this year.
say
We think
this-
of trend as being about 1.8% or in that range. We're forecasting growth well below that, and most forecasters are. But you're right. There's certainly a possibility that growth can be stronger than that. And that's a good thing because that means the economy will be more resistant to a significant downturn. But of course we are focused
So we're
on the
getting
thing I started
100
with,
and
which is
125?
getting inflation back down to 2%.
What am I
We
misreading
can't fail
here?
to do that. if we, I mean,
It's
that's.
going to split 100 into
if we
two
were to fail to do that,
sessions,
that
so
would be the
0.5,
thing that would be most
0.5,
painful
or
for the people that
0.5
we
and
serve.
0.75,
So
or that
for
means
now,
100 and
that has to be
125 for the rest of the year.
overarching focus. And you see that, I think, in the SEP, in the levels of rates that we'll be moving to reasonably quickly, assuming things turn out roughly in line with the SEP. So that's how we think about it.
Mike, thank you.
0.755. So there will
Thank you,
be,
Mr. Chairman. In a world of euphemisms that we live in here with below-trend growth and modest increase in
news.
unemployment, I'm wondering if I could ask you a couple of direct questions for the American
think,
people. Do the odds now favor, given where you are and where you're going with interest rates, favor a recession? 4.4% unemployment is about 1.3 million jobs. Is that acceptable job loss? And then, given that the data you
Relief.
look at is
Long time I heard
backward-looking
about
and the
relief, man.
lags in your policy are forward-looking and you don't know what they are, how will you know, or will you know, if you've gone too far?
So I don't.
we got a 1 hourly close.
I don't know
guys,
what
1
the
hourly
odds are.
close.
I think that there's a very high likelihood that we'll have
But we need to get
a
about
period
200 more average.
of what I
Gotta
mentioned
check
is
it up
below trend growth, by which I mean much lower growth, and we're seeing that now. So the median forecast, I think, this year for among my colleagues and me was 0.2% growth. So that's very slow growth, and then below trend
But
next
30
year. I think the
minutes is
median was
okay, 15 minutes is
1.2,
okay,
also well below.
10
So
minutes, 5
that's a
minutes,
slower.
everything is okay, you know.
It's a very slow level
Right
of growth, and it could give rise to increases in unemployment. But I think that is something that we think we need to have, and we think we need to have softer labor market conditions as well. We're never going to say that there are too many people working, but the real point is this. Inflation, what we hear from people when we meet with them is that they really are suffering from inflation. And if we want to set ourselves up, really light the way to another period
bearish, though. It's not
of
just
very
dropping
strong
after
labor market, we
breaking,
have got to
supports.
get inflation behind us. I wish there were a painless way to do that. There isn't. So what we need to do is get rates up to the point where we're putting meaningful downward pressure on inflation, and that's what we're doing.
He didn't say 100 and 125, but he said that there will be no
certainly
longer
haven't
above,
given up
you know,
the idea that
above
we can have a
75, I
relatively
think. So
modest
people just
increase
deducted that
in
from,
unemployment. Nonetheless, we need to complete this task.
But how will you know, or will you know, if you've gone too far?
It's hard to hypothetically deal with that question. I mean, our really tight focus now continues to be ongoing rate increases to get the policy rate up where it needs to be. And as I said, you can look at this SEP as today's estimate of where we think those rates would be. Of course, they will evolve over time.
Chris, Rugaber.
Thanks. Chris Rugaber, Associated Press. I wanted to follow up with what you just mentioned about the labor market. You've said several times that to have the labor market we want, we need price stability. And you've suggested maybe there isn't a trade-off in the long run.
Yeah, it's
But
good.
in the short run, there is a lot of concern, as people have been expressing here, about higher unemployment as a result of these rate hikes, or as a result of the rate hikes. So can you explain, though, what about high inflation now threatens the job market? I mean, you seem to suggest that inflation, high inflation will eventually lead to a weaker job market. So can you spell that out a little more for the general public and how that would work?
So for starters, people are seeing their wage increases, their wage increases eaten up by inflation. So if your family is one where you spend most of your paycheck, every paycheck cycle, on gas, food, transportation, clothing, basics of life, and prices go up the way they've been going up, you're in trouble right away. You don't have a cushion, and this is very painful for people at the lower end of the income and wealth spectrum. So that's what we're hearing from people is, it very much that inflation is really hurting. So how do we get rid of inflation? And as I mentioned, it would be nice if there were, a way to just wish it away, but there isn't. We have to get supply and demand back into alignment, and the way we do that is by slowing the economy. Hopefully, we do that by slowing the economy, and we see some softening in labor market conditions, and we see a big contribution from supply side, improvements and things like that. But none of that is guaranteed. In any case, our job is to deliver price stability, and I think You can think of price stability
Did
as
he just say that
an
it will
asset
slow down
that
the
just
economy?
delivers large benefits to society over a long period of time. We really saw that for a long time. The United
Pullbacks are
States
normal,
had
guys. Pullbacks are
2%
normal.
inflation, didn't move around much, and that was enormously beneficial to the public that we serve. And we have to get back to that and keep it for another long period of time. To pull back from the task of doing that is you're just postponing. The record shows that if you postpone that, the
get a
delay
4-hourly close
is
soon.
only likely to lead to more pain. So,
Which
you
is
know, I
very
think
good, actually.
we're
4 hour
moving
is very good.
to do what we need to do and
Yeah,
do our
4 hour
jobs,
looks very nice.
and that's
Still
what you see us
53
doing.
minutes left. So unless this, just dumps to the downside, 4 hour looks good.
Thank you for taking the question, Mr. Chairman. Edward Lawrence for Fox Business. So you had said that Americans and businesses need to feel some economic pain as we go forward. How long from here should Americans be prepared for that economic pain?
How long? I mean, it really depends on how long it takes for wages and more than that, prices to come down, for inflation to come down. And what you see in our projections today is that inflation moves down, significantly over the course of next year, and then more the next year after that. And I think once you're on
We
that
need more
path,
people to FOMO.
that's a good thing. And things will start to feel better to people. They'll feel lower inflation. They'll feel that the economy's improving. And also,
Volume
if
has
our,
been
if our
nice
projections are
here, and then,
close to right,
consolidation is down nice.
you will see that, that the costs in unemployment they're meaningful, and they're certainly very meaningful to the people who lose their jobs. And we talk about that in our meetings quite a lot. But at the same time, we'd be setting the economy up for another long period. This era has been noted for very long expansions. We've had 3 of the 4 longest in measured history since we got inflation under control. And that's not an accident. So when inflation is low and stable, you can have these 9, 10, 11, 10-year, expansions. And you can see what we saw in 2018, 19, and 20, which was very low unemployment, the biggest wage gains going to people at the low end of the spectrum, the smallest racial gaps that we've seen since we started keeping track of that. So we want to get back to that, but to get there, we're going to have to get supply and demand back in alignment, and that's going to take tight monetary policy for a period of time.
As a follow-up, what is that economic pain in your mind? Is it job losses? Is it higher interest rates on credit cards? What is that economic pain?
So it's all of those things. Higher interest rates, slower growth, and a softening labor market are all painful for the public that we serve. But they're not as painful as failing to restore price stability and then having to come back and do it, down the road again, and doing it at a time when actually now people have really come to expect, high inflation. If the concept of high inflation becomes entrenched in people's economic thinking about their decisions, then sort of getting back to price stability, the cost of getting back to price stability just rises. And so we want to avoid that. We want to act aggressively now and get this job done and keep at it until it's done.
Nicole from CNN. Thank you, Chairman Powell. Nicole Goodkind, CNN Business. Existing home sales have fallen for 7 months straight. Mortgage rates are at their highest level since 2008. Yet mortgage demand increased this week, and housing prices are still elevated. Now, at the end of your June press conference, you mentioned plans to reset the housing market. I was wondering if you could elaborate on what you mean when you say reset, and what you think it will take to actually get there.
So when I say reset, I'm not looking at a particular specific, set of data or anything. What I'm really saying is that we've had a time of a red hot housing market all over the country where, famously houses were selling to the first buyer at 10% above the ask before even seeing the house, that kind of thing. So there was a big imbalance between supply and demand. Housing prices were going up at an unsustainably fast level. So the deceleration in housing prices that we're seeing should help bring sort of prices more closely in line with rents and other housing market fundamentals. And that's a good thing. For the longer term, what we need is supply and demand to get better aligned so that housing prices go up at a reasonable level, at a reasonable pace, and that people can afford houses again. And I think we probably in the housing market have to go through a correction to get back to that place. There are also longer run issues though with the housing market, as you know, where you know it's difficult to find lots now close enough to cities and things like that. So builders are having a hard time getting zoning and lots and workers and materials and things like that. But from a sort of business cycle standpoint, this difficult correction should put the housing market back into better balance.
Shelter made up such a large part of this hot CPI report that we saw. Do you think that there is a lag and that we will see that come down in the coming months, or do you think that there's still this imbalance that needs to be addressed?
2018.
No, I think that shelter inflation is going to remain high for some time. You know, we're looking for it to come down, but it's not exactly clear when that will happen. So it may take some time. So I think you know, hope for the best, plan for the worst. So I think on shelter inflation, you've just got to assume that it's going to remain pretty high for a while.
Okay, we'll go to Jean for the last question. Hi, Jean Young with Market News. You've talked about the need to get real rates into positive territory, and you said earlier that policy is just moving into that territory now. So I'm curious, how restrictive is rates at 4.6% expected? Is that expected to be next year? How restrictive?
So I think if you look, you know, when we get to, let's assume we do get to that level, which I think is likely, you know, what you're going to do is you're going to adjust that for some forward looking measure of inflation. And, you know, that could be, you pick your measure. It could be, you know, there are all kinds of different things you can pick and you get. But what you'll get is a positive number. In all cases, you will get forward inflation expectations in the short term, I think, that are going to be, assuming that we're doing our jobs appropriately, that will be significant. So you'll have a positive federal funds rate at that point, which could be 1% or so. But I mean, I don't know exactly what it would be, but it would be significantly positive when we get to that level. And let me say, you know, we've written down what we think is a plausible path for the federal funds rate. The path that we actually execute will be enough. It will be enough to restore price stability. So this is something that, as you can see, they've moved up, and we're going to continue to watch incoming data and the evolving outlook and ask ourselves whether our policy is in the right place as we go. Thank you very much.
That's it. That's it, guys. That's the Fomc meeting. I'm a little bit unsure whether that's bullish or bearish. So, you know, that can be discussed, definitely. 75% possible for trades if holds. Possible for trade. So 75% we got. It was expected. I think what was actually quite bullish in this regard is that he said, you know, 100, 125 for the rest of the year. That means 0.5 or 0.75 one time and 0.5 next time, or 2 times 0.5. You know, there are still 2 more rate hikes during this year. So we got, you know, 2.0.5 rate hikes, which can actually be good for economy. But, you know, at the end of here, he was actually quite a little bit bearish when it comes to, you know, economy as a whole. And he even said out loud, we're gonna slow, you know, economy is gonna slow down. Now, whether that's, you know, bearish for the market, that's a little bit, you know, we can talk about that. Now, there was a video by Alessio Restani that was saying that, you know, economy and the stock market are not correlated. They are definitely not correlated. So just because economy is going down does not mean that the stock market is going to go down. I will show you a video right now over here. Let's go up here and let's go to the TED Talks. TED Talks, Alessio Restani. There is a video. I don't remember who posted it. The Psychology of Trading. Here is it. Why is there no correlation between this is a video from Alessio Restani. I'm gonna post this in the chat. Why is there no correlation between the economy and the stock market? TED Talk. This by Alessio Restani. I want you to watch this video, and he explains very nicely why there is no, you know, there is not always correlation between that. So just because economy is going down does not mean that you know, the stock market is gonna go down. Does not mean that Bitcoin is gonna suffer, because the economy is not the stock market, and the markets, you know, the trading markets are not the economy, and they are not correlated. So this is a very good video. Watch the video, guys, right now. You know, you can do whatever you want, but you know, you can watch the video. I think it explains it nicely, and I've been looking for this video for a long time, so I don't remember who was it, but somebody actually posted me the video and told me about it, because I was trying to find it. It's a good video. So yeah, economy is suffering, housing market is going down and stuff like that, but they were optimistic on the effects that this might actually be, they're getting some kind of effects, and they're gonna slow down the rate increases of interest rates, meaning they will slow down the rate, and then let's see how this actually works out. Now, what's gonna happen after that or during that, I'm not sure, but markets pump and dump on rumors, on expectations, on forecasts. By the time something happens, it's kind of priced in. Bitcoin had a lot of opportunity to dump hard, but it refused to. Yeah, it might be also that it had a lot of time to dump, but it kind of refused to dump. So there is that. Also, there is some kind of resistance up here. So interesting to see if you're gonna actually break the resistance towards upside up here. Right now, Bitcoin is up like 3.29%. We are technically above where we started. Right over here. 10 seconds before, where is it? Right over here, 10 seconds before the, sorry, not 28. Actually, it was up here. You see here, we actually went up here. Oh, it was up here, we started. Let me go to the, 5-second chart up here. Where do we start Pampu? Up here, right up here. This actually happened, 5, 10, 15 seconds before, yeah, down here. So you can see right now that we came above the level where we started. We tried to hold above that level, went below. Right now we are exactly where we started when the Fomc meeting started. So there has been a lot of volatility up here. And we are at the very same point. Just when the Fomc meeting started, we are at the very same point right now again. So not much has actually technically changed. We went up a little bit down, and right now we are maybe a little bit down from where we actually start, but it's not actually pumped that much. DXY is let's go here on the hourly time frame. What you're gonna see here on hourly time frame, the DXY did dump down to the 20 moving average, tried to break the 111. We had a rising wedge up here on 111. And you can see here it tried to break that on this hourly, but kind of failed and went down. So the question is, will it right now use this bullishness, if it has any kind of bullishness towards the upside, or will it actually get rejected over here as well and continues dumping on the downside? I still think that the DXY is still in an uptrend. Nothing has changed yet the way I see it. Over here we got two lines on the bottom side down here that needs to be broken. Until we have actually broken these two lines, the dollar is still on its way, trending towards the upside. Can do something like this forever, right? But if it starts breaking this line on the upside, it might actually increase the speed how fast it goes towards the upside. So that might be a thing. But right now it's actually okay for us a little bit up here, because it got kind of rejected by the resistance up here at the top. Stock market right now back in green after being down in red. You can see on the daily time frame up here we have a green candle up here on the daily. This is Dow Jones futures. If you look at a 1 hourly time frame up here, you'll see this big wick that happened, up down, a lot of movement happening. Right now it's going a little bit maybe down the last hour up here. They just happened in the last 18 minutes up here. So a little bit unsure still what's going to happen up here. There has been just a lot of volatility and not much has actually happened. We did not get bullish engulfing candle on the 30-minute chart up here, but we managed to get back up here again. Right now going down again. Are we gonna right now after doing this move still go down again to these levels down here again? That kind of depends to be seen. Same here, but we did get a bullish engulfing candle on the 30-minute chart. 1 hourly did go up there. Maybe we are going for some kind of retest on the downside before we continue in towards upside, but I won't say too much about it. This is the Nasdaq. This is the thing that's mostly correlated with Bitcoin. You can see here on 30-minute chart we went down, and on the next 30-minute chart we actually managed to pump more than we actually dumped towards downside, which is actually quite good. Hourly time frame closed down. Right now we are above it, but still 25 minutes left on the clock up here on the hourly. The 4 hourly is the most interesting up here, and as you can see up here we are trying to hold above 10 moving average on Nasdaq. The Dow Jones right now is also trying to hold above certain levels up here, but it doesn't look that bad yet. I mean, overall I think it's okay. Bitcoin is pulling back like normal, and you can see here, if you just remove everything from the charts, that we still got 40 minutes on the 4 hourly close. So I would say that as long as we can close above a 10-20 moving average up here, I think that might be okay. Altcoins are pulling back a little bit towards downside. There are some altcoins pumping, some altcoins dumping. This is the ape right now hitting the resistance up here. I heard a lot of people, you know, talking about XRP. XRP actually managed to fall out of this rising wedge up here towards downside, then pump right back inside again, which is actually quite good. Let's see a little bit other stuff up here. Metals. The gold is up by a lot. You can see up here the gold is up on the 4-hourly big time. Right now it's above all of the resistance up here, which is quite good. It hit the 50 moving average resistance up here, but that's fine. But you know, the dollar is on the move towards the upside, which is actually quite nice. It had this this bottom down here, and right now it's trying to, you know, bounce from over here, which can actually be quite good, because there was a resistance up here. Right now it's breaking that resistance. You know, it bounced off for 10-20 moving average. Still, you know, this is actually 2 hours and 38 minutes left, so you know, it's too early to call this. I don't know why this has actually that long to go, but you know, there is that big volume up here. Silver also big time towards upside. 4-hourly time frame also closing in 2 hours and 38 minutes. I think silver, gold, and these other things have a different, you know, time frame than Bitcoin. So there is that. Oil is still in a falling wedge on a big time frame up here. It's consolidating up here. A little bit unsure where oil actually wants to break towards the upside up here. A little bit unsure about that. So, but it's unfolding. But right now, you know, on this Fomc meeting, let's see, you know, the Fomc didn't actually move that this lot. There was definitely activity up here in the last hour, but it did go up more than actually down. So I think we need to, you know, wait for the daily close, wait for some other closing and stuff like that. ESP 500 right now. Oh, what happened to the ESP 500, man? If it just dumped down big time over here. Dow Jones also crashing towards the downside. Big time. Maybe we talk too soon, guys. Maybe we talk too soon, because right now DXY is not pumping that much, but it has this, you know, reversal pattern up here happening. So it looks like it wants to go towards the upside. It looks like DXY wants to go towards the upside. S&P 500, you know, Dow Jones dumping big time. The Nasdaq is not dumping, but Dow Jones is dumping. And S&P 500 dumped big time towards downside, back down to these lows down here, which is not actually good. It should have held, you know, these levels over here. So whether S&P 500 and Dow Jones and the Dow Jones actually has anything to say about this, a little bit unsure about that. DXY, is this a reversal pattern towards upside? Maybe some kind of, you know, maybe some kind of because it broke this, it right now has this over here. There's some kind of channel up here, maybe. This is 1 minute chart, guys. 1 minute. We are looking at 1 minute chart. Oh, yeah, but we are looking at 1 minute chart. But you know, still it's 1 minute chart. Okay, maybe you should not be looking at 1 minute chart, guys. Maybe you should not be looking at 1 minute chart. This is after all S&P 500 and Dow Jones. So maybe you should not be looking at, you know, right now it's back in green. So you know, whatever. Up here, maybe a little bit red, maybe a little bit green, whatever. Bitcoin back up in 3%. Let's go here and look at a 5-minute chart up here. Did it actually bounce? No, it went down to some kind of support level up here. It's still at some kind of level up here where we started. My view until approach of next bit is holding just sideways, 16 to 18 months. That's a long sideways movement. Slow move to 14K. My view to general is still exactly the same. We're gonna see that. A battle moment like this is a very dangerous time to try and trade. Wait till water comes down a little bit. I mean, you know, volatility is volatility. You know, traders want that. That's bullish behavior. That's bear got a slap. I think we need to educate the paper hands selling, panic selling whenever the wind blows. Bitcoin has a lot of opportunity to dump hard, but if you see, yeah. So guys, I'm gonna leave you with that. It was an interesting stream. We saw the dump on the 1 minute chart. We saw the moves. A little bit unsure what's gonna happen next up here. So there's definitely some kind of trend line up here that needs to be, you know, held, something like this, broken towards the upside. You know, if you wanna, maybe some kind of, you know, double bottom down here. But you know, if it starts breaking these levels on the downside over here, it might dump back down to these levels down here again, 18.8. So never say never. You know, right now there is a lot of trading going on, a lot of speculation whether this is a bullish or bearish thing. Guys, come back in the chat, and you know, if you think that this is actually a bullish behavior, please post. The thing that I noticed from the last Fomc meeting is that you know, they have this narrative, you know, 0 point X is bullish or bearish, and then you get this press conference when things sounds a little bit like this, a little bit like that, but it's only afterwards that if people are too bullish after the press conference, there will be kind of news that the markets are going down because this was actually bearish and actually bad, but the thing is that it's just manipulation to one side or other side, and then the news come out and say this is actually bullish or bearish, based on whatever they want to be. So even though I feel a little bit that this isn't that bad, it's not that bad, it's actually, the way I see it, it's actually okay, it's actually bullish news for markets. It can actually be bearish for some reason, because I do not understand all of the metrics that he was talking about. I do not understand what kind of effect they have on the economy, on the stock markets, on buying, selling and stuff like that, right? On investors. So there can definitely be reasons for whatever, for markets to move up or down, that I do not understand. So even though I'm bullish, there might be something that's been said that's hugely bearish. And once the market actually understands this and price this in, then we'll see actually the real move, right? We'll see massive shorting of the market hours. It might be massive short, but right now it also looks like it's gonna break this yellow line over here towards downside. If that goes down, then we go down to the previous lows, and everything goes to shitters again. Sorry for the language up. You see it up down, like it's a very, very indecisive, very indecisive. The 4 hour is still going down to the down here. I won't like us closing below, what's that, all the way down here. That's below 1930. So look at a 5-minute time frame. We got like 200 moving average, something like that on 5 minutes time frame up here. 1 minute time down there. There we go. A little bit move towards downside over here. So it does look a little bit bearish. I don't know what's gonna happen, but there is definitely a lot of trading going on. There is definitely a lot of speculation going on, and if you're that kind of person, I hope you do well. Guys, that's it for me. I'll see you later in the chat, and I'll see you maybe tomorrow, hopefully tomorrow, on the live stream. Bitcoin Daily, 9 AM Central European Time on the dollar. Guys, join KuCoin while you can. I'll see you around, guys. Bye-bye.